Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also get you expert views as to how should you be investing in markets right now and where are the opportunities of investment really pouring in for you at this point. But first up, a quick look as to how the markets are moving as we inch closer to the day's close. Now, when we see the Nifty and the Sensex, both are still trading in the red zone. In fact, we've seen, deeper cuts right now. The Nifty moving about 0.4% lower in trade at 18,564. The Sensex also down by 215 points or so at 62,628. So selling pressure aggravating about 0.4% of a decline for the benchmarks. Let's look at the broader markets. They've also now slipped into the red, about 1/10% lower for both the mid and the small cap 100 indices. Now, when we talk about the other sectoral movers, remember that in the morning trade, in the first half of trading action, we did see the Nifty Bank holding up into the green, but now it's slipped to the lowest point of the day and has turned absolutely flat as well. Also slipped lower below that 44,000 odd mark too. And all the constituents talk about the PSU banks that were already lower. They are inched lower. We've also seen sell-off coming in on the private banks as well as the financial services are also concerned. They are also seeing some cuts coming in. So you can look at your screens. The PSU banks now down by 1.2 odd percent. The private banks, although still holding up into the green zone, but have actually slipped quite a bit from the high point of the day. The financial services now also down about at the lowest point at 1/10% lower in trade. Apart from this, let's look at the other sectors like FMCG, IT, pharma. These were the defensives that were also trading under pressure. The auto stocks are also down in trade about half odd percent or so. The defensives, FMCG, IT, all of them are also trading with losses coming in. So it looks like we are going to be ending this Friday on a lower note as we speak as of now. The top gainers and the losers, let's have a look at those as well. As far as the Nifty gainers are concerned, which are the stocks that are still holding up amid this kind of losses in the markets? You do see some private banks still holding on. IndusInd Bank, Axis Bank up in green. Axis Bank, apart from that, you're seeing the power grid stock up by 1.3% or so. L&T, Adani Enterprises, Ultratech Cement about half odd percent to 1 odd percent kind of gains coming in for this, these stocks as well. On the flip side, which are the stocks that are creating pressure on the markets right now? Of course, a whole host of stocks will be coming in as far as the PSU banks are concerned. There are losses also coming in on the IT pack. The IT heavyweights are down in trade as well. Some of the automakers like Hero Moto, Eicher Motors, these are down in trade. The life insurance companies, HDFC Life, SBI Life, they have come under pressure. Tata Steel, Divis Laboratories, HUL, the other laggards as we speak. But time to welcome our guest on the show. Sonam Srivastava, founder and CEO at Right Research, joins right in. Welcome, Sonam, and thank you so much for taking the time out for this discussion. Well, after inching very, very close to the all-time highs, we have seen the markets now looking at some selling pressure building in. How is the next week outlook really building up for you?
So I think see the pause that the RBI governor sort of kept has had an impact on the market's mood, right? The markets might have anticipated that we might see a cut soon, but that is something that was not that did not come, and the commentary also remained like highly vigilant, right? That they will not cut anytime soon. They will be aware of the global economic scenario, etc. So I think given that we are seeing this correction happening in the PSU banks and a lot of correction happening across the broader markets in riskier stocks, so which is like a mean reverting stock, I think, given the improvement that we are seeing in the global market, this is just an opportunity for us to start buying instead of, you know, offloading at this point in time. So I think, any correction that we're going to see at this level would be a good opportunity for us to pick up some of these good high value stocks and stocks in these favorable sectors like banking, consumption, etc.
Okay, so banking, since you say there is an opportunity to buy, let's start off with the leader of the pack from the PSU banks. I'm talking about SBI. There's news flow as well. The bank has
Yeah.
approved raising of 50,000 odd crore rupees through debt instruments, but the stock is down in trade about 1.5% in trade today. We've seen remarkable performance in the past from SBI over the last 1.5 years. Has actually turned out to be very well for the SBI shares. But going forward from here, amid this fundraise, what does it mean, first of all, for the stock and the company, and how should investors be
Right.
viewing this opportunity?
Right. So I think, see, SBI itself has a tremendously profitable business. They have a very good financial situation, and the financial situation of banks as a whole is improving. So, it's a great stock. So I think what looks to be seen is what is the need, or where is SBI going to invest this huge amount of cash that it is raising through debt, right? This amount of debt that they're bringing onto the book, what will be the use of that cash? I think the market will react to that news. But yeah, SBI being able to raise this much capital from reputed buyers is, I think, a great show of confidence in the stock, right? By investors.
Okay, understood that.
Mm.
Let's also focus on, the other stock of SBI, and that's SBI Life Insurance, along with that, the other insurance majors as well, like HDFC Life, ICICI Prudential as well. We've seen a brokerage
Right,
house report, Macquarie report, which has cut target prices and downgraded these stocks to neutral right now. What
right.
are you also concerned about this pack at this point in time, and what would you really see on these pack of stocks?
See, I think insurance itself has a very good long-term opportunity. Right now, insurance companies might be at a top in terms of valuation. The sector remains attractive, and due to the new taxation laws that have come in, there has been an impact on this sector, right? So
Correct.
I would not, sort of talk about, fresh buying at this point in time. We can watch, and we can, maybe watch for some more correction before, investing in the sector.
Okay. Interestingly, what's actually looking good in this kind of a weaker sentiment is also the stocks that were actually underperformers. The new age tech
Yeah,
stocks. Paytm has
right.
come back into flavor. Zomato, for example, has come back into flavor. In fact, Zomato is now above the issue price of 76 right now. It's at a year's high. It's 53% above its
Yeah.
March lows as well. On the flip side, when we also talk about Paytm shares have jumped 14% in just the last 3 days. Now, I want to understand from you, between these two new age tech stocks, where are you more bullish on, or are both in the buying zone category? What would you advise investors to do on these stocks?
No, I think these stocks are one of the most interesting opportunities that are out there in the market, right? Any stock that can go from a unprofitable but a big scale business to a consistent compounder, to a consistently profitable company.
Yeah,
Any stock that is doing well in that journey, is something that I think everybody would jump on it, because you're seeing an
sure.
opportunity of this. Company turning into a large compounder, right? So it's a very exciting opportunity, and I think this opportunity has always been there, but these companies have started showing numbers, right? Paytm has shown good growth in revenue as well as profitability. Similarly, Zomato's unprofitable Blinkit business has delivered this quarter as well. So there's
Yeah.
been a lot of exciting news for investors, and if these companies can deliver, right? If let's say in a year or so we have some good news coming in where some of their businesses turn profitable, I think these companies will be extremely, extremely exciting for the market, right? So yeah, I think it's an exciting opportunity, and now, and we are seeing the returns of the good work that's being done by the management in turning their books profitable right now.
Okay. Any particular targets you'd like to share for these stocks?
Yeah. So I think Paytm has a big runway ahead, and I think same for Zomato, right?
Okay. Okay.
I could see a good, double-digit upside in a few months, and it looks like an exciting opportunity that is, finally come to fruition, right, in this market. So quite
Okay.
excited.
Okay. Another space that I wanted, or stock that I wanted to discuss with you is IEX. Now, this performer of the
Yes.
past, one of the favorites of the D Street, has now, looked at some kind of underperformance that is casting a shadow. We've seen the stock slip about 10% today, 23% in the last two trading sessions. There is a talk about market coupling, which has cast a shadow. Help us understand, do you know what market coupling is all about, and how should investors who already have these shares in their portfolio now look at these stocks? Should they accumulate at these dips, and what should fresh investors do?
Yeah, so I think, like you said, right, that some analysts have evaluated this new news of market coupling coming in, and they have, cut down their targets for the IEX stock. I think, again, it's a very strong company for the long term, but in the short term, we will have to, understand the long term implication of this new rule that has come in. And I think there's a little bit more that I will need to do before I, take a call on this bit of stock. Yeah, so we have actually had IEX in our portfolio for a very long time. Right now, we do not have, but
Okay.
the sector, the power sector and IEX there, it's extremely exciting zone, and we should wait and watch and how this news pans out.
Okay.
Yeah.
Particularly for you, which are the sectors and the stocks that you are now turning bullish on as we enter the second half of the current calendar year? Your own thoughts on what can outperform and where should investors be betting now?
Yeah, so I would approach this in, I think, a few factors, right? So first thing that we're seeing is that smaller stocks are doing better, right? Like the broader market, mid and small caps are outperforming the large caps over the past few months, and that's quite exciting for people like us who tend to look at more active strategies, right? So we see that continuing over the next few months also, that the broader market outperforms the larger, the large caps.
Hmm.
Talking about sectors in this space, what is very exciting in the current market, banking continues to be exciting, financial service continues to be exciting. Obviously, you will see correction here and there, right? That's part of the process. But this sector remains attractive for us. Similarly, the consumption theme, and in the consumption theme, you have auto ancillaries, hotels, and consumer discretionary business, etc. So all these sectors are quite exciting. We are quite bullish on the infrastructure, capital goods, real estate. That sector, is seeing an upcycle that is emerging, right? And if an upcycle starts there, then it lasts for a few years, right? So that's a quite an exciting opportunity that we are watching out for. Cement, in the similar fashion, looks quite exciting. Yeah, so yeah, uh, so I think we are adding a lot of stocks in the banking, financial system, consumer, and infrastructure theme, and we are sort of staying away a little bit from the large cap IT pack, even though, on the innovation side, we have taken a bet on a few mid cap IT and a few innovative stocks like the, Paytm Zomato that you talked about, right? So, a lot of opportunities in this market, but we have to be careful. And I think you have to not just blindly chase momentum right now, but also be very, very aware of the valuations.
Okay, understood that. Well, thank you so much,
Yeah.
Sonam, for being with us on the show and discussing all these insights and opportunities for all the investors at large in this current market setup. Great speaking with you. Thank you so much. Let's look at the
Thank you.
markets right now. The Sensex down about 210 points, so it is inching lower, about 0.3%, 0.4% lower in trade. 18,564. We're just about 15, 17 points minutes away from the day's close, but it looks like it could be a weaker ending to the week, which has been volatile as well. We'll keep an eye out on how the markets move from here on, and you can do the same by being with us on Business Today TV. So don't go anywhere. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms like Facebook, Twitter, LinkedIn, and Instagram. Until then, thanks for tuning in.